and the S&P gets hit, where do you think, and you can get to this, I know you have another chart up, but where do you think it actually could bottom out? Like, does it have a chance of putting in a double bottom at 35? Could it go to 34? Where does it go?
Yeah, let's definitely go take a look at that, because this is the kicker, is that it really depends on how bad things get. And to be honest, I'm not good enough to know that. But what I do know is that we have levels that, again, you can see again how we're back to this trend line. If you take this low from 2020 and you put it right through, that's what we're hammering on, right into this area. So we are into a lot of resistance. Now, there's two scenarios for the S&P. One is we stall here and we roll over, which would mirror the 1929 to 1930 period. It would mirror the dot-com period, as well as 2008, 2009. The other scenario could be the Bitcoin scenario, right? Where Bitcoin had that big middle dip and we made a slightly higher high before rolling over. And again, in both cases, there's issues for the market. One just happens to be much more overbought, which usually means the downside will be much more dramatic. What I do think, though, is that at minimum, we're going well below those October lows. And I think the two levels that I would watch closely is this pre-COVID line right here. And this is kind of like the mild recession scenario where inflation is not really that high, but we're just kind of stuck in this mild recession because the Fed can't print us out. And that would be right around this 32.65 level, right? If you get in a bigger issue, there's a secondary line here, which we can connect here, which is around that 3,100 level. So these would be the two first areas, and notice how they're converging, which means it would be major technical support in this, let's say, 33 to 3,100 level on the S&P. If we want to talk about the catastrophe side of things, then you're talking about revisiting this area down here, which I hope for all of our sakes that does not happen, because if that were to happen, I would hate to see where the economy is at that point. The only reason I bring this up is that if you look at charts, there's a tendency for charts to do what we talked about earlier, which was a retrace to the scene of the crime, where you have a double top here and you break out and then you retrace down to it. Because of Fed intervention in 2009, right, and the quantitative easing that went on for so many years, the markets never were able to naturally retrace to retest that level. And the question then becomes does at some point in the future, does that have to happen? I hope it doesn't. I hope this is our kind of our base case here, but just be aware that if we got a really bad recession, let's say we get stagflation. So we get a bad recession with inflation elevated and the Fed isn't able to print us out of it. That would be potentially the target down there. Scary stuff, really.